going to break down more. I'm sorry, I'm going to break down for everybody like how we can maximize reading the book map, how we can maximize reading the charm data, how to combine all of it together to understand what's going on with the markets. And I'm going to start streaming the charm data on YouTube, so you guys will be able to watch it on YouTube. Or what I will do is, instead of YouTube, I might just stream it on Discord as well. So I'm just working on that, and yeah, so that's going to happen next week. So the streaming will start in that way. What you'll be able to do is you'll be able to see what's happening with the charm data, and you'll also be able to watch the YouTube stream as well. That way you can maybe open 2 tabs on YouTube and are able to watch it simultaneously. Or I can open it on Discord. So just let me know how you guys and where you guys want it. And I can do the live stream, okay, for that. So that way you'll be able to see it. Okay, so the first thing in the morning is like, we draw our levels on the hourly. So this is 10. On SPY, we draw our levels on the hourly. We're looking for, where the main levels are. And, so this is the main level where the sellers came in. So, you just draw a level here. Okay, and then you look for areas where the last time buyer stepped in, which is here, and we can expect this is a chop area. So we can also expect chop again in this area once we come back down because of how the price action was, right? And then we have, so this is a good area. So once we break, we can look for this area. And then you can see this is all chopped. So you will just draw your levels here and here. Okay. So once you have all that, then what we do is we look at our algo zones, and those are drawn based on the close of the candle. So you got the 6 a.m. close candle, which is right here. We have the 8 a.m. close candle, which is right here, and the 9 a.m. close candle, which is right here. So this tells you where the algos have positioned their position, and algos want to trade. If we go out of this areas, then we need to stay above these algo zones or below the algo zones in order for us to go to the next zone. As we can see, we were coming down and we were just getting wicks on the hourly. We're coming back down, coming back up, down, up, and then we finally broke through. We held the algo zone and then we pushed price up because price got our confirmation that we don't want to stay in the algo zone. Okay, so that's just your basic chart. So you have that drawn on the hourly. Now, the next big thing is you need to have the SPX open. This is very, very important. Okay, so every 25 points is your psychological level, 50 point being the biggest psychological level. Okay, we draw a level at 5600 psychological level. Okay, 25 points is our next psychological level, right? 5650 is our next level. Then we're looking at 5675, right? Every 25 points is our psychological level, right? Then we're also looking at liquidity, so we can see some, right here, some sellers came in, so we can draw a level here, but you can color code it, okay? So you can draw your level here, and then you just color code it to a different level, to a different color, okay? That way you can know which one are your key levels and which one are your regular levels. Or if you don't even want to draw your these main levels, you can just know them on top of your head and then just draw your main levels, okay? We can see price came back here into this area and we had chop, right? So what do we expect here? Chop as well, all right? So if we're expecting chop as well, the first time it touches, we want to take those trades. Okay, 5600 is a big level. So as soon as price is coming down here, we would want to take calls, right? And once it's coming up here, 5625, we want to take puts. Okay, but why are we taking puts on 5625 and why are we taking puts at 5600? Why are we not just like, okay, do you know what? What if it just breaks and it goes up? Why are we not just like, trading that? So that's why we use charm and all our other tools. Okay, so let's break that down. Why we do that. Okay, so I'm just trying to get the chart. Okay. All right, so we talked about, that that we always keep an eye on levels from the day before. And the day before, we could see a lot of activity in 5620s. That was on Thursday, and then when we opened up, we opened below 5620, and then we went down. Okay. Now let's look at this chart and charm and analyze what's happening. Okay, so I posted the chart at 9:38, and orders are coming in, and this will update as it goes. What we can see is sellers are in control. Why? Because you can see a lot of orders, even these orders right here. Okay, and remember when I said when the price is really expensive, the contracts, just double the numbers in your mind visually, because anything over 2,000 is orange. Okay, so we could see all these orders that were coming in, and they were seller side. Okay, we could see 5,600 being a magnet area because we have a lot of orders, 7,740 and 4,500. Okay, so the reason I'm just saying orders, these are not the total amount of orders that are placed. There's a lot more orders. There's millions of orders. I'm just giving you. You just have to notice the value. Okay, the value is the charm value. It uses a mathematical calculation and figured out the how many are buyers and sellers, and it analyzes all of that and tells you how many are open and closed. Okay. So we could see that the 5,600 is a big zone. Okay, so we can see that the amount of orders that are here and the amount of orders that are here. So this is considered a balanced zone. A balanced zone basically means that the buyers and sellers both agree that this is the area where we want to fill most of the orders. And if this is the area they want to fill most of the orders, then we've got to look at the other areas where there's a lot of activity going on. We could see some activity going on in 55.85 and some activity going on in 55.50. Okay, we could see these two activities, but then we can see that activity over here is a lot more, right? So seems like a good range, could be the sellers are actually looking for more upside. Okay, so what we have to watch is we have to look at these values and we have to compare them throughout the day, which side is increasing and which side is decreasing. Okay, if price is going up, then these values will increase. So all these orders that are below will automatically start moving up, and they will start adding to these orders, and that will tell you the direction of the market. Okay, so we look at this to see the direction of the market. So 5,600, I took calls here. Near there, 5,600, I took calls. Another reason I took calls, because on the Bookmap, we can see liquidity, right? So this matches with our charm as well. We can see liquidity forming up. I know this says ES and this says NQ. You can use a conversion indicator that will convert the values of this into SPX or SQ or SPX in SPY or QQQ, but you don't need to really do that because you know where the SPX price is trading. So if it's coming near liquidity, you know where the liquidity is. You can just look at it and be like, okay, this is the 5,600 liquidity we are looking at. And we can see there's liquidity here, and then we see there's barely no liquidity here, and there's some liquidity going up in above. So that looks like that they want to keep it chopped up because the premiums are high. Okay, so the 25-point range makes really, really good sense because it adds with our 56.25 from here where the activity is going on, and we can see this. So there is some volume here and there is some little bit of volume here. So in order for us to stay in this area, and if you want to go higher, what they would have to do is they have to keep the price pinned here and make sure 5,600 respected throughout the day. These values increasing, these values increasing as well, and this value increasing as well. And then we will just stay in the sideways range. Okay, so I took calls 5,600 first touch, and then I took puts 5,625 first touch. My stops were under 5,600, and my stop for the first put was above 5,625. Okay, so that was the first touch I took because this is the big level, so I took calls. Okay, and like if it's a big level, orders will sometimes kick in early. A majority of the times they kick in early, usually 5 points early, and we could see based on Bookmap that there was a lot of orders here and they started hitting a little bit early, right? And they kicked in because we can see that there is liquidity here and there is not much liquidity up, and these orders are a lot of buyers. So you can see some bounce, and you can see the orders kicked in early. So took the calls and then I took the puts, okay? Because fixed 125. Why? Because we know the contracts are expensive. we know that in order for us to go to 5650, we need a lot of volume, okay, a lot of buyers coming in because this is just the morning and majority of the orders are here. So if this is where the majority of the orders are, they're going to come back and fill this area a couple of times, right? And then another thing we could see is that we drew our algo zones, but even before 10-minute candle close, we can see that we are below 560, okay? We are below 560, we're coming down and we're having all these wicks. We're coming down, but we're not dumping more. Why are we not dumping more? Because the 5600 psychological level is still holding. So that tells us that this is a trap. They are trapping people because they are under psychological level on SPY, but they're not under psychological level on the SPX, and they are just trying to trap people. And we know based on charm where the orders are, and we know based on Bookmap, and that confirms where the liquidity is. So everything is matching, and yes, there are orders below, but majority of the orders are above. So combination of all of that tells us that this is a trap, and we are not going to be risking. We are not going to be risking. Let's just say puts here because the price is holding. And if 5600 doesn't hold and candles close below, then we can see some continuation downwards. But until then, this is good. So if you took the first put and first call and we're out of that trade, then we do not take a trade. We do take a trade above 5625 if the candle closed. But such a big candle and it got to 5640 and then it reversed. Why did it not go to 5650? One we could see. So this picture was from the early morning, like 9:38. So then I posted another picture. Now let's analyze this picture. What's going on? As you can see, the orders started increasing at 5600, right? Orders are increasing, these orders are decreasing. And what's increasing above? We can see some activity going on 5670s. We can see some activities going on 5650s. You see how these orders are 1000, 1300, 1000. But then we look at 5645, it's 890. Okay, so, and then we look at all these values, right? Above 5625, good value, good value, good value, but this is lower. Okay, so if this is lower, that means that in order for us to break through this 5640, we would need volume to push through this dead zone, because technically the reason this is a dead zone is because we have these natural amount of big orders here and price can naturally move through here, which is what it did. We went up naturally, but at 5640 we got frozen because no big volume came in. And what did price do? Price just then went back. Okay, because they could see these natural orders here, and they're like, okay, no, this is these orders are more normal. No buyers could come in to push the price out to 5650, so we left this as a pending level. Okay, so if price came back down, right? Price came back down, and then they just traded around here because we could tell that they want actually to go higher. Okay, they are holding their levels, and then the algos are holding their levels, and they're bringing price down to trap people again, and then they're going to push it again. Okay, so we do not take a trade here, but the next time when it closes above, okay, we do take a trade here because this is a good close and it's opening above. And one thing we know is that, okay, last time there were not orders here and now we are back up. So naturally orders will start moving here. So this time if it breaks with volume, we will go touch 5650. Okay, and then we can look at the next picture that the orders started coming in, and you see how the orders came in and the orders disappeared, right? The values increased, and since the values increased, we went up. Okay, so after that, during lunchtime, right now, lately, if you do not see a continuation in lunchtime of the price going in one direction or the other direction, that means it's not going to be a trend day. It could be a sideways chop. So what they did is they did a sideways chop. Okay, so all they did is sideways chop. So it's not worth to trade it. If you see a trend, then you can trade it in the trend. But if there's not a trend day, and it's going to be just chop, because at lunchtime, you know, the algorithm slowed down, everything slowed down, and they try to look forward to balancing the books. Okay, so we had two scenarios going towards close when I took the puts. As you can see, these orders then start. These orders start analyzing, and then these orders start shrinking towards the power hour area, power hour time, because they're going to analyze where it's going to go. Okay, one thing we could see is the 5670s. These areas were getting a lot of volume, right? This area was getting a lot of volume, and actually it was getting a lot of volume earlier in the day, and the orders were moving up. So since we were getting a lot of volume here and we never went towards this area, that's something that we keep on watch. Okay, we could see that liquidity was building up, and then you can see that at 3 o'clock I took a lot of put. Why did I take a lot of put? The reason I took a lot of put, multiple reasons. Okay, we could see the 5650 being a really big balance zone. One thing we know is sellers are in control. They could decide that, okay, you know what, 5650, I have a lot of orders here. If I stay under, I could actually go down, right? Sellers are in control. Okay, they can push the price down. We see some orders 5600. We can go back down, and 5625. We break this, we can dump down to 5600. So the risk is $30, but the reward is $300, $400, because we were looking around here and it was still respecting 5650. But what did they do? They started pushing price up, and they were like, no, we are actually not going to sell today. We actually want to buy it more cheaper. Okay, if that's their goal, they want to buy it cheaper. So the risk was $30, reward was high. We didn't get it. But then we saw later in the day, AI called out 5670. And why did AI call out 5670? And why did I say that can squeeze hold? And why did I say looking for 5670? Because if you go back and analyze throughout the day, we were seeing activity at 5670, right? We were seeing activity at 5670 throughout the whole day, and we saw the volume increasing, but we never touched that area. So once the 5650 broke, because this had a lot of liquidity, right? So if it breaks a big wall of liquidity, and if you're watching Bookmap and you're hearing the tick-to-tick sound and you're seeing this volume breaking, what do you think is going to happen to price? All those sellers that were here, okay, they're going to get out of their positions and they're going to become buyers. Okay, so the liquidity got taken on and they become buyers and the price pushes up. Okay, so which is why AI called the 5660 lotto, and it went in the money, and we went for 5670. Okay. And then once you saw the 5650 break, it was obvious, and AI also alerted that, okay, this is breaking, is going to go fill the gap. And that's why we were able to take the AI day trade, and it made back, the lotto that we took, and the risk and reward. Okay, so the lottos are based on risk and reward. So that's how you had to see that what was going on. But you have to go through these pictures and analyze it. I post these pictures, but if you want to watch it live, you can watch it live. So it's up to you guys if you want me to either do a live stream. Just so let me know in the chat if you want me to do a live stream, or you want me to post these pictures and break it down for you guys, what we are seeing and what's happening with price. That way you can understand a little bit better. Or if you want, I can just open a live stream and you can just watch the live stream and analyze it yourselves. But that's how we were able to see it. So you're gonna watch all this together, and then that's how you're gonna take the trade. And that's how we were able to catch the AI lotto as well, because I was also going to alert the same thing, that we should buy calls, but AI called it, and it was just a perfect entry, and then we went up in the money. Okay, so that's how it was done, and that's how you need to watch the Bookmap and this together. There were some other questions about damn, there's so many questions here. So yeah, the last 10 minutes are really, really good, guys. When you're playing liquidity, when you're looking for liquidity, last like 10, 20 minutes are really good for the lottos. So if you're looking for lottos, it's best to get in the last 10, 20 minutes. Yes, I did take early, but I was looking for a dump to 56.25. Risk and reward, the setup was there, so why not? You got to take action. If it didn't work out, doesn't work out, on to the next. But the last 10, 20 minutes is when you want to watch. If you want to take lottos, you should wait for the last 10 to 20 minutes, okay? You'll be able to see the direction of what's going on, and you'll be able to see the difference in charm as well. Okay. So yeah, the reason you are not holding your trades and the reason you are not um, you're getting out too early and you're panicking is because you're not looking at the charm correctly and you're not seeing where the activity is happening throughout the day. If you look at where the activity is happening throughout the day and where they were placing orders and what levels did not test and how like these 5670s and all these areas were getting targeted, and then yes, we have already spent time here and we could go down, but and we could go down. We've spent a lot of time here, and we could go down, but we haven't touched these areas, and sellers are in control. And if they want to go higher, and we can see the values increasing in power hour, then we take it. We can see the balancing happening to 55. They started moving these orders because they were started panicking that, oh my god, like buyers are destroying and eating up all these orders, and all those orders got moved, and then buyers came in and they pushed the price up. Okay. So the reason you're not holding is because you're not reading the data. Because if you read the data and you can see where the buyers and sellers are, then you'll be able to hold your trade much longer because you will know what's going on, right? Um, I know somebody had a question about Tesla as well. So let's look at that. So Tesla, we were looking at 250, okay? I was saying that, it's going to go up. And some people like, I chose contracts, and even though Tesla was going in the money, it's like if you're buying the same day expiry contracts on Tesla and the price action is like this and it's not going straight up and it's not a natural price action, it's like moving in waves, then your contracts are not going to move much, okay? If next week's is expensive and you're expecting a $10 move, then you can buy $15 or $20 out of the money and you can hold it towards the level at the end of the day and just watch if the momentum and the move is holding. If the volume is being choppy, and you can analyze that based on the SPY and SPX, what they are doing and how they're playing games, then expect the price action on other names also to play some type of games until then they decide to move the price up. Okay, so the games were just being played, which is why your contracts were going up and down. So analyze the SPY SPX, see what the market is doing, and if the market is in a trend zone and it's trending throughout the day, then you can take the same day expiry and it will just follow the trend and you will make good money. Okay, because you want big candles and you want the trend to continue. But if you just have games being played, then it's best to go a week out. Okay, so it's best to go a week out, and then you'll be good. But I'm also going to do a live session next week, so I'll answer more questions. This was just so like you guys can see, like like we all are seeing the same thing. Okay, so some people are taking the trade, some people are not. The only difference is you're not reading it correctly and you're not remembering what's happening with the price. You got to put all of this together because like look at the trades, right? If you look at the SPX, you can see the price action. It hits the level, and by the time I will type the alert, it's going to be up 20-30%. So why not just set up your alerts, and as soon as it hits, just take the position, and as soon as this hits, you will know exactly what to do. You will have 30% to 40% more money if you just pay attention and you just set up these alerts. You can take 2 to 3 trades a day. Don't trade over here. Analyze what's happening with the market and the charm data. Everything is given to you. All you have to do is just think about it. It just takes 2 minutes. Look at it, analyze it, and just see what's going on. Once you've analyzed it, you like, okay, 5640, this is what's happening, this is this. Okay, so I see what's happening. This is natural. It might, if no volume comes in, it's just going to come back down. And if it comes down and it comes back up this level, then we can expect it 650 because we can see that the values are increasing, and this could become the next balance zone as soon as this is above 2000. So if we come back down and come back up, the orders will start moving up again, and they will add more orders. And this is what I need to watch. 5670, I can see some activity going on here. So this is what I'm going to watch throughout the end of the day. The 6000 is 5600 is still balance zone. but we can see the orders are moving up because time is being spent above the 5600, and orders are being moved up over here too. So this could become the next big zone. Okay, that's how you read it. And then later in the day, we can see that, well, that's what happens. 5650 becomes the next big zone because orders move up, right? You can see that. So that's how you're going to read it. Let me know if any questions. And we'll do a live session and we'll go over more stuff. All right.